G'day everyone, welcome back to Pete's Investing, June 14, 2023. This is a US crude oil price update. On our weekly, we're in a bearish scenario, but we've broken up into a neutral on our daily. But it was also in a bullish scenario on our hourly. Let's look at each of these in a bit more detail. On the weekly, our bearish scenario is made up of the triple moving average of the price chart, which aligns with the moving averages of the CCI 150, giving us the bearish signal, so primarily bearish trades and bearish momentum. On the daily, it's temporarily just broken up into a neutral positioning after it was bearish in the last few days, and that's just because it's bounced off this key support area at 67.12. So you can see there it's still in this band. It's been in this range for some time between that resistance at 74.38 and that support level. Now there is some signs that it may continue to the downside. So looking at the hourly, you can see there a bit more in terms of the roller coaster event of what it's been doing. It's very uncertain, and that's broken up into a bullish movement at the moment. But again, I wouldn't be going long until all three timelines are aligned, especially on a downside. I would suggest at this point we are seeing there's no real divergence happening on the CCI and the price chart. There was a divergence which started back here, but that failed with the price continuing to the downside. So, and that the CCI also likewise disassembling and not working out. So that divergence failed, but again, no loss to you if you were trading it because you wouldn't have entered it because it needs to break above that little area, that trend line there to have entered the trade. But on the trading side of it, in terms of the longer term period, if you're aligning with the weekly and a daily, you can see there this is the bullish backtest and the bearish backtest. And you can see there where it's averaged down on the long side and averaged down on the short side. And the way to avoid those averaging downs, we don't use stop losses, is to make sure that you align with the weekly and the daily. So you can see they're going long. You would have avoided that period. And that was the start of November 22. So go back to November 22. You can see there are a couple of long positions on the daily. But November 22, there are no long positions on the weekly. Hence, you would not have entered those long trades. Likewise, on the short side, that started back there in January 22. January 22, there were no short positions on the daily, and January 22, no short positions on the weekly as well. So you would have avoided that averaging down. Anyway, to understand that and other trading strategies, reference the links in the description below. Subscribe to my Patreon page, where we also do weekly scans of stocks, currencies, and commodities. Subscribe, like, and share the channel. Thanks for watching, and see you in a future video.